My name is Varun Ganesh.
My name is Akshay Bhan.
And my name is Towers Paris.
So here's the agenda for today. First, we're going to be looking at the background and understanding your current financial position. Then we'll be looking at the performance indicators and objectives. Then our vision, which is our recommendations to your family. Our action plan, which has our timeline and how we want to implement things, or the best course to implement them. And then finally, we have time for your questions to us that we can answer. So first, our background. So first, we should look at your current financial position. So we see Mr. Banks has $71,000, and Mrs. Banks, you guys have $56,000. So the combined net salary of this is $127,000, and combined monthly income post-tax is $7,625. The assets you own, savings and stuff, is $2,627. Retirement funds, $6,575. The house down payment fund is $20,000. And here are the liabilities. Student loans are $76,000. Credit card debt is close to $7,000. Collection account is $8,150, and auto loan is $35,000. So if we look at our net worth here, so the assets minus liabilities, it is we are currently at a net worth of about negative $97,000. So here are next performance indicators and objectives. So here are financial goals. Here are the goals that we want to help you achieve. First is purchasing a home near family in Brighton, Michigan. Second is establishing a working budget and considering joint accounts. Third is beginning retirement planning. Fourth is addressing Olivia's upcoming vehicle debt. And fifth is developing a debt management strategy. So here are the main financial concerns that we have right now. So with housing, it is spending, close to $1,500 a month on rent. And this is also with the desire to purchase a home near Brighton. So we should have $10,000 saved for down payment with family match promise. Here's our budget management and debt management. So we're currently operating with separate finances. So there are no formal budget trackings, uncoordinated bill payments, and then we talked about this before. The liabilities, there's $76,000 in student loans, $15,000 in credit card and collection debts, and then regular use of buy now, pay later services, and then high interest debt limiting financial progress. Retirement planning, very limited retirement savings. So it's and there should be more investments and other stuff to further improve financial. And then unused employer match, so that's about a loss of $2,500 a year, and uncertainty about where to begin. And then transportation is Olivia's lease ends in June of 2025. Marcus owes $35,000 on vehicle loan, and it's high monthly transportation costs. So we've set up a roadmap for the next 2 years. More than 2 years, that if followed should lead your family to all the financial goals you want to accomplish. For this process, we have split the plan into 5 parts. The first part is immediate actions. Second part is debt management. Third part is housing plan. Fourth part is insurance and protection, and fifth is retirement and future planning.
So now I'll be talking about the planning that we have set up for you. First, we have immediate actions. Our first step is establishing joint financial systems. This is joint taxes and anything like that. Then also maintaining separate personal accounts with agreed fund money. So this is money that you would like to spend on travel, trips, shopping, anything that you want yourself. Then also we'll be implementing a budgeting system. This can be done using apps like EveryDollar or YNAB, which are budgeting apps. And then we'll also set weekly 15-minute finance meetings, which will be with our team, and we can set that up after the conference. Then for our second part of the immediate actions is building an emergency fund. 3 months is what we're looking for, and that should be around $7,600. which is like, that should cover if anything were to happen, touch wood it does not, you have 3 months of essential expenses saved up. Then also we want to keep that money in a high yield savings account. You can use a credit union for that, and then also another alternative is to use like a bank like SoFi, which have very good rates. Currently rates are around 4.5%, which is much higher than a traditional bank savings account. And then also we would like to allocate $500 a month until this is fully funded. Second, we're going to look at the debt management strategy we have set up. This is a 4-phase strategy, with phase 1 being settling the collection account. We can settle the collection account by negotiating with the collection agency, and we believe that you can get a settlement offer of $4,075, which is our first initiative. Phase 2 is to eliminate credit card debt. This is the one that can hurt the most if it's not fulfilled the quickest. Currently, you have $6,900 in credit card debt, so we want that to be gone as soon as possible. Phase 3 is to target private student loans, which you guys are currently paying 8.25% interest on. And then phase 4 is to consider federal student loan options, which you typically have cheaper rates and are more stable. And our projected debt-free date is to be fully debt-free in 24 months. Third is our housing plan. We understand that you as a family are willing to move in and around the area of Brighton, but you specifically want to be in Brighton due to family. So we have 2 options here. First, this house on the top is $325,000 and is in Milford, which is about 20 to 25 minutes away from Brighton. And then on the bottom is another option that is actually in Brighton. The one in Brighton is a bit more bigger and also cheaper. The target purchase date that we have set is January of 2026, with a purchase budget of $275,000 to $325,000. And we will be doing a 10% down payment, which is around $32,500. Because it's 10% and not 20%, you will be required to pay PMI until it hits the 20% mark. And then also, you currently have saved $10,000 for the down payment with a family match of also $10,000. The additional savings needed to hit that down payment goal is another $12,500, meaning that you would need by January 2026 to save around $6,250 to get another $6,250 from your family. And then also, after all of that, the monthly allocation should be around $700 after emergency fund completion, which should be done by the time of January 2026. Fourth, we have insurance and protection. This is one set. First, we have life insurance, and for purchasing term policies, we're doing a $710,000 coverage for Marcus, because the rule of thumb is to do around 10 times what your annual salary is, and this will be a 20-year term. For Olivia, it's $560,000, which is also a 20-year term to match that 10x on salary. Then for auto insurance, we're going to combine policies for a multi-policy discount, which should be around 15%, which will be included in the plan of making your guys' finances more together. Then for health insurance, we'll have implementing HSA contributions. HSA is a health savings account, which is an account that is more flexible than an FSA, which is usually provided by an employer. And then annual contribution will be about $4,150. This account does grow, and you will be saving around $900 every year in taxes. And for our 5th part, we have retirement and future planning. For our retirement strategy, we have Marcus. Marcus, you should begin to start doing contributions to your 401k, because you're in essence losing $2,500 a year in that employer match. So contributions at 5% would put you at about $3,550 per year. Then also that will capture the full employer match of $2,500. Then for Olivia, you should resume your Roth IRA contributions to $3,000 a year, which is about half of the set limit that you can put yearly. Then invest in ETFs like VOO, SPY, and QQQ, which track the S&P 500, which historically have shown more growth than in security, and this will replace the current fund that is invested in, FMHTX, with these investments. FMHTX isn't a very viable position because it's a municipal bond and it doesn't serve the same tax savings as these stocks. And the projected 30-year retirement balance should be around $1.2 million. Then next we have college savings. Now with your baby coming on the way, we believe it's always best the earlier you start. And we think that you should begin a modest 529 plan, which is a college savings account, after debt reduction. So initially, we think you should put $50 a month, and then once you've received around 2 years down the line a bit more financial security, we think you should increase it to $200, and this should be approximately around 2027. And this projected 18-year value is $95,000.
Alright, so we're going over Olivia's vehicle needs right now. So right now, Olivia's leasing a vehicle, and that lease will end in June. So she's on the market for a new car. We recommend that she buy something used, such as the 2022 Ford Bronco Sport Outer Banks Edition. So this car ranges on the used market anywhere from $20,000 to $25,000. So you're likely looking for a car with a clean sheet, so you don't have to pay more in insurance or other things. And so the car has a long road life as well. So the car, we're looking for one that's 35,000 to 60,000 miles, just so you get the most bang for your buck while still maintaining the quality. So the monthly payment for this car would be $375 each month on a 5-year loan. It would lower the insurance costs, and you would have no mileage restrictions, unlike if you're leasing or doing anything else. Alright, next let's go over Marcus's vehicle recommendations. So Marcus, let's start out. You have a very nice car, but in reality, you guys are in some sort of financial trouble right now. So you guys can be selling that car and get a lot of money for it, really. So we recommend Marcus selling his car due to its high balance left. This is the money that you haven't paid on the car yet. So we have found comparable 2023 models on the market from $30,000 to $35,000, which would effectively take away the balance that Marcus, you guys, have left on the car. So we recommend buying the same car, which is a 2020 model, which is on the used market, selling from $20,000 to $25,000. This ensures that you can save quality and value while having the same exact car. So this leads to much more efficient and reasonable payments in the future, allowing you guys to ease some of that financial pain while maintaining quality. Alright, so let's look at some budget adjustments, areas for cost reduction. This is something that you can do right now. Instead of eating out 5 times a week, let's cut that down to about 2. Let's make sure that you're in the grocery store making the same quality meals just without paying that premium. You're going to be saving $700 a month, and entertainment as well. Let's make sure that you guys aren't using a bunch of streaming services. Find that one that has your favorite TV show on it and use that one instead of a bunch. This will save you $45. Now switch your phones to a family plan rather than individual plans. This ensures that you guys are getting the most bang for your buck. This ensures that you guys will be getting discounts on phones and any other perks of having a family plan, and you can add your child to it when they become of age. This will save you about $75 a month. And then sports betting as well. We recognize how hard it is for someone to quit sports betting, so we encourage you guys to use an app that you can use fake money on instead of having to, really deal with the consequences of using your own money. And then transportation. We recognize you guys might want different cars, so make sure to research some economical transportation costs, and you can come back to us when you have those, and we'll make sure to review them. So this will save you about $200 a month, so the total monthly savings will be around $1,170, likely even more. Alright, so let's go over some real quick things. Just the timeline, this is the implementation. So foundations, 0 to 3 months. So right now, 3 months later. Establish joint accounts and budget systems, begin emergency funds, settle a collection account, start Marcus's 401k contributions, that's huge, and consult with an insurance agent. Next, stabilization, 4 to 12 months. Complete the emergency fund, another key aspect. Eliminate credit card debt, which in reality is contributing a lot to your financial struggle, maybe even the most. Begin aggressive home savings so you guys can make sure that you guys are right around brain and create a very nice future for your family. Implement HSA strategies to ensure that you guys have the healthcare you need, just in case something goes bad in the future, but we hope it doesn't. Growth, 13 to 24 months. Complete home down payment, purchase a home, begin college savings for your future child, which is huge. This will ease up a lot of stress in the future. Address Olivia's vehicle needs, and resume Olivia's Roth IRA contributions to ensure that when you guys become of age for retirement, you guys aren't being taxed or giving away any money, you guys are saving as much as you can. And optimization. This is for way far in the future, 2 years in the future and beyond. Accelerate student loan payment, increase retirement contributions, expand college savings for that new child that we all love and care about, and review your financial plan quarterly to make sure that you guys are being wise with your expenses and making sure that your payments are on track and efficient. Alright, so this is the 4-phase process. We really hope that you guys implement these. Thank you.
Yeah.
Alright, so any questions?
I'm gonna take take a moment to think of a question.
Okay.
Last slide was terribly impressive. Loved that last slide. Agreed. Loved.
Yeah, I thought, this is fantastic. It's always nice to give someone something to go home with when you meet with them. I like the phases. The question I have is, so there's some outstanding debt, right? Credit card, student loan, car loans. You know, should I, with my extra savings each month, what should I do with it? Should I focus on one? Should I pay them all equally? What should I do?
Yeah, so I think that as a team, we believe actually that you should like prioritize which debt is like the most important to you. Like, which one have you been putting off for the longest time that you feel like might like hit you the hardest, if not paid the soonest? So like we're thinking student loans, you might have some more time with that, but like that credit card debt or that collector's debt, that should be prioritized first. So maybe like stick to your regular plan for the student loans and then maybe increase using these extra savings that are almost $1,200 in extra savings. Maybe utilize that towards like $600 towards the collector's debt and also $600 towards the credit card debt.
Agree with that? Think that was good? Did a great job.
I really like the timeline slide at the end and the actionable plan to implement. And I also thought that your solution for the sports betting was very realistic. Keep doing it, but just do it when you make money instead of no money. That was thoughtful. And I don't have a question.
I honestly don't have a question on either. That was particularly good, and the handout is a wow. So, bravo, good job.
Thank you.